And with me is Eric Olson, District President for Talent Solutions and Business at consulting firm Robert Half. So, first-time unemployment claims continue to rise, now at the highest level since October 2021, it seems like, 264,000. Are we getting any clear signs that the labor market is cooling? Maybe we'll start here.
Well, we don't see the labor market cooling. We see clients being more determined to put a little more process in place and take their time to ensure they have the right hire. There are 9 million jobs that are open in the United States, 9.6 million, which is 2 million more than pre-pandemic. So the economy continues to add jobs. This cooling that people are talking about, or maybe are feeling, is just companies taking slightly longer in the process. They want to view more candidates. It doesn't seem quite as frantic as it might have been a year ago, but the economy is fine and the job market is quite strong.
Now, I understand continuing claims, is a good indicator of how hard it is for people to find work after losing their jobs. Maybe tell us a little bit about that. What is it telling us?
Well, so it is interesting, right? When you're unemployed, you want to find the next job, you want to get after it. So a longer process can be a challenge to overcome. But the war for talent is over. Talent won, and talent is now saying, I'm going to choose the right position for me. I'm going to choose the right flexible work schedule for me. I'm going to choose opportunities that really align with maybe my interest or how I see my career evolving. So I think that a lot of our candidates are finding they have options and they want to make the right choice. So all this might seem cooling because it's not as frantic as maybe it was a year ago, but the economy and the job market is still quite strong.
Are we still at something like two openings for every person looking for a job?
Yeah, it's roughly, it's amazing, isn't it? 9.6 million jobs, a little over 4 million unemployed looking. So you've got that kind of 2-to-1 matrix there. Now, is it in the job or the industry or the profession that you're in? Maybe, maybe not. We've seen changes over time. Jobs that maybe weren't around 5 years ago are now the hot. You see a lot of AI. You see a lot of companies really wanting strong soft skills now, the ability to interact with customers. That's really been a challenge.
Maybe I can have you comment on the labor market, specific sectors. Which sectors are we seeing strength and which sectors are we seeing, perhaps some weakness?
Well, certainly a lot of the unemployment that you've seen in the headlines has come from layoffs in some of the tech sector, but many of those people are finding their next opportunity very quickly. We've seen strength in accounting, we've seen strength in legal. Marketing and creative is very strong as companies look to interact with their customers through various forums. I think you've seen customer service do quite well. As we roll into the summer months, you expect to see the retail or tourism or hospitality pick up, certainly. I think some of the things that have been maybe a little challenged have been, positions where maybe the company is financing debt to do an acquisition, or maybe the company is a little bit more tied to the interest rate, which has certainly, gone up over the past 12 months. And those industries maybe that are very capital intensive, whether that's people that build large plants or highways, some of those things, there is some government spending in those areas, but the interest rate has caused many companies to just, if not do a pause, just make sure they understand the entire financing package of what's available to get their product to market.
Yeah, and let's talk a little bit about that. How are companies feeling about, interest rates rising, and of course, as well as banks perhaps shoring up their balance sheets in light of fear of bank runs? How is that impacting companies?
Well, it certainly has been an interesting time to watch some of the challenges with a few of the banks. It is interesting that our banking system is quite strong. Obviously, I'm not an economist, but the ability of companies to access capital, I think, is quite strong. And what we've seen is that when the Fed pauses on interest rates, typically the next 12 months is a very, very strong return to the stock market. What business likes is certainty. We seem to be at a place where maybe the Fed is ready to pause, and that's obviously the first start before they maybe reduce rates in the future. What we've seen with our clients is that they understand this is really returning to historical norms as far as the cost of capital. It has been a large increase over the past 18 months, but we're really at a kind of a back return to normal. So once they feel they've got some stability and they're able to forecast and able to look ahead, that gives a lot of our customers and a lot of our clients the ability to feel confident about hiring or moving forward with those new projects.
So a lot of people I speak to, a number of them are saying that credit conditionings are tightening. And if that does happen, if that's happening already, it could weigh on the economy. And if that happens as well, can we assume with some confidence that a downturn in the labor market will come sooner or later? What are your thoughts on that?
Well, America's largest corporations are as well capitalized as they've ever been. Access to capital is still strong. Now, the underwriting standards may be slightly higher, which might limit some companies that are maybe in the startup mode or maybe are trying to really stretch to get that next acquisition or the next project in the ground. What we've seen with our clients, though, is that their balance sheets are quite strong. They realize this is kind of the new normal. And I think that business continues to go on, right? They need to take this opportunity to strengthen their internal team. They need to take this opportunity to find the right skill sets. And candidates out there recognize this, and they're going to look for companies that are going to do well in this environment, hopefully even better if rates moderate or come down. And so I think that it's certainly something that candidates are looking at. What does the interest rate situation do to affect that new opportunity or their current company where they're at?
All right. Just a couple more things from you. The labor market remains resilient, right, despite continued interest rate hikes from the Federal Reserve and its fight against inflation. So the central bank did project, though, a rise in unemployment this year and next year. Maybe you can comment on that.
Yeah, well, certainly over time, we've seen 2% unemployment as kind of the perfect market condition, right? That's 2% that are transitioning to new jobs or maybe moving to a new location, new market, whatever the case is. So it is potentially going to increase, but certainly not at a level that I think is going to impact the productivity of the worker or the ability of clients to find talent or for candidates to find jobs. Certainly what we've seen is that there's a wide access to talent. You've got remote workers. You're able to tap into different markets. You've got certainly companies that are looking to expand on people that want to enjoy maybe a little bit of the gig economy where they have a second side hustle, so to speak, where they're able to tap into maybe something more creative or more aligned with their hobbies or their interests. And that ability to generate income on the side certainly helps if the economy was to soften. We've not seen that yet. We've seen strong demand. We've seen companies come to us. The last NFIB report is interesting. 60% of small business owners tried to hire or have an open position last month. 92% of them are reporting they can't find the talent. And many of them are reporting they had no applications at all for these open positions. So while the numbers maybe are increasing slightly for good candidates, ones that understand their skill set, understand they need to really market themselves and be approachable to these companies, I think it's a really good time to be a candidate.
All right. One final thought. With the rise of AI and how fast it's developing, is there a threat in this area of job displacement?
Well, it certainly is in the news quite a bit. We've seen companies really wrestle with how much do we embrace this? There's certain aspects. I think we saw something on the news yesterday. Wendy's might try AI at the drive-thru. There's certain aspects of the job market that clearly could be outsourced quite quickly or utilize AI. I think it is still a vast open frontier land that companies have to understand, because to use AI, you have to put a lot of data into the system. Much of this is confidential. This could be your business strategy, it could be your financial reports, could be maybe something legal that you're asking. So it is interesting to see where this will take us. We think it's probably like the dawn of the new era, just like Microsoft Outlook or Excel. It did increase productivity. It did maybe change the type of jobs that are out there. But those candidates that can understand this new frontier of AI and maybe harness its ability to speed up decision making or to speed up the ability to interact with your customers quickly, those candidates and those companies would do quite well.
Well, all right. Thank you so much today, Eric. It was such a pleasure speaking to you.
I enjoyed it. Thank you.